Londra'dan herkese merhaba. Piyasalara özel bir parantez açıyoruz. Bugün Londra stüdyomuzda değerli bir konuğumuz var. Pasquale ile birlikteyiz. Kendisi Finisterre Capital'ın kıdemli makro ekonomisti. Hi Pasquale, thanks for joining our program.
Thank you for the invitation.
First of all, I would like to start with this Iran war. How much do you think this war changed your calculations, scenarios, assumptions on global economy, and what kind of a mark do you think has this war left on financial markets?
It's changed things quite a lot. I think we went into this year with a view that this would be a good year for growth and a good year for risky assets. And instead, we're here debating stagflation, which is the worst world for risky assets. So a slowdown in growth with significant inflation pressures. We've seen a lot of concern, obviously, about the conflict and about the impact inflation will have. And we've seen central banks turn suddenly much more hawkish everywhere, I would say.
Mm-hmm. So everything has changed in terms of monetary policies and assumptions on growth, inflation. Do you think worst is over in this war?
It's very difficult. I think what's new, and as we speak, things are developing very fast. I think one thing that's new is that it seems that there's a desire to look for an off-ramp. It's not clear where that off-ramp exactly is. It's not clear at what level these discussions are taking place. But I think it's too soon to say that the worst is over.
So can we say that the impact might linger even if this war ends, for example?
I think for sure. I think especially if you look at the level of prices. So even if we come to some sort of resolution in the next couple of weeks, I think the level of prices and the level of risk probably stays built into asset prices, whether it's energy prices or spreads or risky assets for a little bit longer. I think that's fair.
Can we say that you're most closely following emerging markets? So what has changed in your stance to emerging markets? For example, are you in a wait-and-see period right now, or are you in a sell mode right now?
I think it's very difficult to take a very strong view here. I think most investors would tend to be cautious and sort of wait how the situation pans out. Let me give you an example. So, for example, in the front end of a lot of emerging market curves, you're now pricing aggressive rate increases, even though you may think that's not the appropriate response. That's not what I think that central bank will do. You will still sit back and not act because you respect the fact that there's a lot of uncertainty out there. What I'm trying to say is asset prices can easily overshoot, and until you see a little bit more clarity, I don't think anybody's going to deploy a lot of risk, even when assets have cheapened to the point where you say, I actually think that value is there, but as long as you don't see some stabilization in the situation, I don't think people will deploy risk.
Mm-hmm. Do you also see a divergence or decoupling in terms of how markets are pricing these risks? For example, bond markets might price something different and stock markets might price something different. Is there divergence and decoupling in markets?
It would depend very much on geographies. In some geographies, for example, the FX has maintained value very well, but the rates market has repriced aggressively on the central bank. So it will depend from market to market, I would say. There isn't a broad trend I would be able to identify.
Mm-hmm. So in terms of emerging markets, who are the winners and who are the losers of this war?
Winners, very few, if any. I mean, from a stagflation point of view, where the world just looks worse than it did a month ago, I'd say everyone is a loser. Now, in terms of who is better shielded, I would say a region like Latin America, where you have net energy exporters like Brazil, often mentioned, Colombia, Argentina, Mexico to a lesser extent, perhaps. But clearly, the most impacted economies are in emerging Asia. You have, Turkey, obviously in emerging Europe and Middle East, Central and Eastern Europe. So, obviously, you do have some differentiation of LATAM versus the rest of the EM here.
Mm-hmm. So in what terms do you think Turkey is affected adversely?
In several terms, I would say this is a price shock. This is a confidence shock. So price shock impacts inflation and impacts the current account. Confidence shock obviously impacts risk appetite and therefore flows. And there's pressure on the currency, which the central bank in Turkey has decided to meet with robust reserve intervention. And it's seen as central to what they're trying to do, which is anchor inflation expectations. So it's a difficult policy choice. Thus far, they've chosen to use reserves. They've done so adequately. Other central banks have chosen to allow the currency to adjust, including, for example, Egypt, which has allowed the currency to find a new value. Turkey has so far chosen to very much stick to the same course, to preserve the stability of the system.
Do you have any calculations or any new assumptions on the reserves of Turkey?
So based on the latest numbers, so there's many ways to look at this, but you have sort of the net reserve position. This, as of today, I think we were down to 18 billion and change. Pre-crisis, there were 70 billion. So just looking at this, you would say, well, we've lost over $50 billion, but a lot of that is, remember, gold prices falling. So probably something in the mid-30s to high 30s in terms of actual FX intervention, which is not, not small, obviously, and creates a few question marks on how long the central bank will want to do this with, or whether it will look for other options, including potentially doing some gold swaps to gain more liquidity out of its gold stocks, or
there are
potentially
saying that the central bank might use
or potentially a rate hike on the gold. Yes, there are reports, as I understand, unconfirmed. A lot of gold. They may want to monetize it using FX swaps. Some of the gold is held here in London. We'll see. I mean, these are all options the authorities have. The firepower is there. It boils down to a policy choice. And I was saying another tool is probably to indicate and then implement a rate increase. Again, we're moving down on the policy preference of the central bank. And at the very bottom of that scale of preferences, there is allowing the currency to adjust. But I think the inflation picture, as is, really leaves that as very much a last resort for the central bank. So we're going through the options, reserve intervention first and foremost, maybe the use of the gold reserves, and eventually a rate increase. We'll see. It's a very fluid situation.
So in the short run, you don't expect an open rate hike in Turkey?
It's very difficult. I wouldn't rule anything out. Probably not if they can avoid it. But at the end of the day, what you're trying to do as a central bank, and this doesn't only apply to Turkey, you have seen central banks across emerging markets flag rate increases. You've seen the ECB flag rate increases as a potential option. Now, what you need to do as a central bank is deliver a lot of confidence. The confidence that perhaps 300-400 basis point of rate hikes buys you in a scenario which is so volatile as today, probably is, when it comes to that decision, maybe a price worth paying just to stabilize confidence onshore.
Mm-hmm. Do you expect any dollarization risk in Turkey?
So far, it's very interesting you ask. So far, I would have imagined some, more dollarization would have taken place. It hasn't, which is probably testament to the credibility of the regime and the attractive, interest rates onshore. But it's something we're going to continue to watch because, as you know very well, this can change very quickly.
Mm-hmm. How do you expect the pressure through tourism and the balance of payments?
Interesting. So the tourism, you may remember during COVID, tourism outlook can change very quickly in a few weeks. And so, this year was shaping out to be a good year, better than last year, as I understand. But it's another of those things that warrants a lot of attention because, tourism is a big inflow on the balance payment side, very seasonal. So obviously, if the situation continues to deteriorate, then that may get impacted as well. And so you have a double whammy of a higher import bill through the energy cost and lower services surplus. Suddenly your current account deficit can grow.
When this war first erupted, when we talked to the foreign investors, they said that, okay, inflation might go up 1 point, growth might go down 1 point, and we have a burden on current account deficit like $15 billion. Do you think, is that all or more to come?
It's very difficult because, for example, the sensitivities I've seen would suggest sort of something like $10 on energy. So you got gas and oil. give you 3 to 4 billion. So yeah, I mean, $30 more or less, you end up in a similar sort of ballpark, maybe slightly lower. So, but remember, all these sensitivities assume that these prices go up and then stay there. If they go up and then go down and then stabilize maybe $10, $15 higher than where you started, the impact is substantially less.
Mm-hmm. So as a last question, from now on, what will you close most closely in terms of Turkey, emerging markets and world economies in general?
Obviously, an eye on a couple of things. So a possible ramp up of the conflict. So is there a way to wind this down in a way where everybody can come out and present some results? Mm-hmm. Because that is a way this will be viewed as more durable. It's not enough to just say that, you know, this ends on this date. I mean, you have to sort of assume that it stays there.
Exit plan.
An exit plan. And if that is the case, remember, we could go back to what we were assuming for earlier this year. You're right, some risk will remain in the price. I don't think we can fully go back to earlier this year. But in this year, this was shaping out to be not a bad year for emerging markets. And for Turkey specifically, I would say if something materializes in terms of an off-ramp, I think you'll see inflows into Turkey again. Mm-hmm.
So things might change quickly if the war ends.
Very quickly.
In a positive way.
Yes.
Pasquale, Diana, thanks for joining our program. Finisterre Capital, Kıdemli makro ekonomisti Pasquale Diana ile buluştuk Londra stüdyomuzda. Sözü İstanbul'a bırakalım.